नमस्कार फ्रेंड्स, वेलकम टू द ABM क्रैश कोर्स डे नंबर 1। ABM क्रैश कोर्स डे नंबर 1 में आपका स्वागत है। फ्रेंड्स, यू मे आस्क मी व्हाई आई एम बिगिनिंग फ्रॉम यूनिट नंबर 17। द टॉपिक नेम इज ओवरव्यू ऑफ क्रेडिट मैनेजमेंट। तो इसका रीज़न है, द रीज़न बीइंग दैट बिकॉज दिस इज द मोस्ट इंपॉर्टेंट टॉपिक, दिस इज द थ्योरेटिकल टॉपिक, एंड फर्स्ट ऑफ ऑल वी विल कवर मॉड्यूल सी इन आवर क्रैश कोर्स, and then after we will cover the module D and B and A. So as you already know, this is 15th March and we have started the crash course from this portion. Everything in this content, in this particular video will be in pictorial format। सब कुछ pictorial format में होगा ताकि आपको ज़्यादा स्ट्रेस नहीं लेना है। जो चीज़ें समझाई जा रही हैं, whatever is being taught, you must focus on that. So let's get started with our first concept, that is the key principle for effective and secure credit management. One thing you must keep in mind, that the topic which we are going to discuss here are super important. There is high chance of them asking in the examination, right? So please make sure that you understand each and every concept very neatly, right? So let's get started. So the first thing is that let's dive into the core principle of effective and secure credit management. At the heart of it, there is something called prudent credit management. You can see at the heart of it there is something called prudent credit management, something every banker and every financial professional should master, right? So this prudent credit management ensure that loan are given wisely, risk are minimized, bank remain financially strong. But what are the key pillars that support this? So the first thing is adequate security. What it means, just like a safety net, this ensure that loan is backed by asset, reducing the risk of default. The stronger the security, the safer the loan. The second is called safety of fund. So what is safety of fund? So bank don't just lend money, they need to ensure that they get it back. So this principle protect the invested capital and ensure its safe return. The third reason is justifiable purpose. Justifiable, right? And there's another point which is called profitability potential. These are the some key prudent case. So you can see profitability potential. What is the meaning of profitability potential? See, at the end of the day, bank are businesses. Every loan should have high probability of generating financial return, ensuring sustainability. And then finally we have liquidity, which means ever heard the phrase cash is king? Have you ever heard cash is king? Right? So bank must maintain liquidity to meet financial obligation, ensuring they don't run out of fund. So each of these principles, remember these are the 5 principles, they play a super important role. So let me summarize the principle in just one pick. So you can see adequate security, safety of fund, justifiable purpose, profitable potential, liquidity. So each of these principles plays a vital role in building a secure and profitable credit system. Ignore any one of this and the entire structure can collapse. Now here is a quick question for you. Which of these 5 principles do you think is the most important for bank? Drop your thought in the comment below. So I have given you the 5 principles. Now to the next slide, and the next slide, as you can see, is related to the legal framework for Indian entity. Whether you are an entrepreneur, a finance professional, or just someone curious about business law, this is something you must know. In India, different types of entity operate under different legal framework. Let's break them one by one. So the first one is none but individual. As you can see, individual, right? So they are governed by the Indian Contract Act 1872, which define the rules for forming a valid contract, right? The second we have is partnership firm. So partnership firm, you must know that these follow the Indian Partnership Act in 1932, right? So this law define how partners share profit, responsibility and liability in a business. So this is about the partnership firm. Then we have something called LLP. What is LLP? Limited liability partnership. So these follow Indian Partnership Act. They follow the LLP Act 2008. Right. So this structure offered the benefits of partnership but with limited liability. Then we have something called company, right? So for company, which kind of act they follow? They are regulated by the Companies Act 2013, right? They are regulated by the Companies Act 2013, and this law govern private and public company, ensuring transparency. And then you have Hindu undivided family. So they are managed under Hindu Succession Act 1956, and this framework apply to family running a joint business, ensuring proper succession and management of asset. So each of these legal structure has its own rule, right? Each of this management structure has its own rule, right, and advantage, limitation, making it crucial to choose the right one for you. So tell me, which business structure do you think is the best for a startup? Please let me know in the comment section. Then let's look at some more, right? Besides, in addition to all these companies, individual, HUF, partnership firm, we have some more, right, for organization, as you can see. So friends, in this slide we are diving into important topic, that is regulatory framework for organization in India. So whether you are a business owner, investor, finance enthusiast, understanding this framework is very essential for navigating the corporate world. First thing first, it's called statutory corporation. You know, these are government created organization governed by specific acts, right? For example, RBI, LIC, SEBI, they plays a crucial role in economic stability. Then we have something called cooperative society. You must know they are regulated under the Cooperative Society Act 1912, Multi-State Cooperative Society Act 2002, or a state specific law, and these organizations are formed to promote mutual benefit, especially in agriculture, banking, rural development. Then come trust and REIT. So what is REIT? Real Estate Investment Trust. So these are regulated by multiple trust act, including the Indian Trust Act, right? Including Indian Trust Act, Public Trust Act, Religious and Charitable Endowment Act, and the WAFC Act. And yeah, club and association, right? So club association, so basically these organizations follow registration legislation, right? So basically, a club and association, if we talk about, so these organizations follow registration legislation to ensure compliance and accountability. So please tell me, which of these regulatory body do you think impact our daily life the most? So we have talked about some regulatory organization here: statutory, cooperative, trust and REIT, club and association, right? So friends, that's about the regulatory organization. Now let's switch our focus and let's come to the empowering economic growth through inclusive priority sector lending. So this is all about the priority sector lending. So let's focus our attention on this particular topic. So this is the we are unlocking the secret of inclusive economic growth. So banks are not just about business, they also play a crucial role in national building by lending to sector that drive economic progress. So which area benefit the most from PSL? The first area is agriculture. So you must know what are the things are included under PSL. The first is agriculture. So farmers are the backbone of our economy. PSL ensure that they get the financial support for farming activity, irrigation and agriculture development. Then we have MSME. MSME, this is called micro, small and medium enterprise. I think you know about it, right? So these business create jobs, boost innovation, strengthen local economy. So PSL provide them with much needed capital to grow and thrive. Then we have export credit. Okay, first of all, let's see the housing portion also. Here it is. Here you can see this is housing portion. So housing portion. So affordable housing is a key pillar of development. PSL help fund housing infrastructure, making home more accessible and affordable. Then we have education. Higher education should not be a privilege. PSL promote student loan financial assistance to ensure that education is within reach for all. And final thing is export credit. So that global trade is essential for economic progress. So PSL encourage export by providing credit to exporter. So without PSL, many critical sector will struggle for fund, slowing down development. So friends, I hope this makes sense to you. What are the sections which are included in the PSL? So friends, before moving forward, let me give you a detail about our crash course which I have just launched. So this is the crash course which I have launched from 15th March. And in this crash course, what I have done, I have prepared two separate folders. As you can see, one is the static folder and one is the daily updated folder. So this is daily updated folder, and in this folder you can see the schedule here, right? So schedule you can see from 15th March to 31st March AVM, then 1st April to 15th April AVFM. Similarly, the rest three subject. And you can see I have created a separate folder for AVM. Inside it, the first day target has been given. That I have just added the PDF, and then we will add the videos. Then we will add the quizzes. So on daily basis you will receive PDF, videos and quizzes. You just have to make sure that the content provided in this folder you have to do on daily basis. That's it. And the rest thing is taken care of by me. I guarantee you that the content which I provide you is sufficient to be covered in just one day by devoting just 1 hour to 2 hour of the time, because the video is just for 30 minutes to 40 minutes, right? And the rest time you have to devote toward practicing MCQs, practicing quizzes, which I will add in this particular folder. So if you want to get if you want to enroll in this particular course, you can get detail. It only costs rupees 700 after applying 30% discount, which is till today, right? So you can WhatsApp me on this particular number. Number is provided on the screen, or in the description section you will see the link of the course. Friends, I guarantee you that if you are feeling short of the time, if you don't have much time to cover in the entire syllabus, then this course is very much beneficial for you. So now let's continue our discussion. Let's see the breakdown of PSL. So friends, let's see the breakdown of PSL, how it works. So let's get deeper into the PSL. and how it support various sector. So first thing is agriculture financing. I hope it is visible to you. Agriculture finance. So farmer need financial backing at every stage. So PSL cover crop loan, medium term loan, and post harvest activity, right? So including transportation with funding up to 2 crore. So remember this 2 crore for agriculture financing, up to 2 crore funding is provided under PSL. Then we have something called warehouse receipt. Warehouse receipt. So see, storage plays a vital role in the agriculture supply chain. So advance against, and you know what is NWR? NWR is called negotiable. NWR is called negotiable warehouse receipt, right? So advance against negotiable warehouse receipt qualify for PSL up to 75 lakh. Remember it. While for non-NWR, backed loan go up to 50 lakh. So for NWR 75 lakh, non-NWR 50 lakh. Now what about cooperative society? So farmer and small producer rely on cooperative society for financial assistance. So PSL provide loan to help them purchase, produce, and sustain their livelihood. And then we have the next point, as you can see, is agriculture infrastructure. You can see here agriculture infrastructure. So friends, farmer producer company, that is called FPC. Sometimes we call it FPC. Farmer producer company engaged in farming, they can get loan up to 5 crore, right? While investment in agriculture infrastructure and food processing up to 100 crore. They remember these limits. Then for startups, so they can qualify for PSL. Remember it. A startup that contribute to economic growth can avail PSL loan up to 50 crore, right? So this is very important. And then you have the last thing, MSME. You know what is MSME? Micro, small, medium enterprise. So this is the backbone of our economy. So PSL extend loan to MSME engaged in manufacturing, services, retail, wholesale trading, right? And including KPI, Khadi and village industry, irrespective of the size and location. So by supporting this sector, PSL boost entrepreneurship, enhance financial inclusion, and accelerate economic development. So please tell me, which sector do you think? So this is just a glimpse. Every content you will get in our crash course just like this, just like pictorial format. So at the end of suppose 5 days before the examination, you will just go through this PDF and everything will be in front of you. You can just revise it very quickly. This is the main motive of this crash course. Now, can you please tell me which sector do you think benefit the most from PSL? I hope you can see. So I have given you the list of 6 sector, and can you tell me which sector is benefiting the most from PSL? Now let's switch our focus to the next PSL breakdown, as you can see in the slide. So friends, let's explore another crucial aspect of PSL, the different financial instrument and the segment it support. So you can think of PSL as the wheel of financial inclusion. So one thing, let me zoom a little bit so that the picture is visible to you clearly. Now, the first thing is called General Credit Card. We call it GCC. You know that MSME often face financial hurdle. To support their specific need, PSL includes credit card designed exclusively for MSME borrower. That is called GCC, General Credit Card. Then comes, the factoring transaction. As you can see here, right, factoring transaction is also included in the PSL. So as you can see on the left side, that MSME depends on timely payment. PSL cover factoring transaction, allowing business to manage their cash flow effectively. Then overdraft under Pradhan Mantri Jan Dhan Yojana. So financial inclusion start at the grassroots, right? So PSL provide overdraft facility to Pradhan Mantri Jan Dhan Yojana, right? So it starts at the grassroots, yeah, right? So PSL provide overdraft facility to the Pradhan Mantri Jan Dhan Yojana account holder, ensuring easy access to emergency fund. And then we have something called micro enterprise. So on the right you can see micro enterprise. So did you know that 7.5% of the total PSL is earmarked for micro enterprise? This ensures that a small business get the financial boost they need, right? That is, remember this limit, 7.5% of the total PSL is earmarked for micro enterprise. Then we have something called decentralized support system, the decentralized sector support. So small scale industries and rural entrepreneur plays a vital role in the economic development. So PSL offer loan for decentralized industry support. And then finally we have MFI, that is called microfinance institution. So to empower a small business and self-employed individual, PSL facilitate funding through microfinance institution. So with this financial tool in place, PSL ensure that every sector from micro enterprise to rural industry get access to the fund they need to thrive. So please tell me, which PSL segment do you think make the biggest impact? Which PSL sector make the biggest impact? Now, then we have something called housing finance loan limit. Remember, in this particular diagram, we will understand how much housing finance loan is provided to the PSL. So let's decode another important category under priority sector, which is called housing finance. So home loan are a crucial part of financial inclusion, right? So as you can see here, metropolitan housing loan, right? The limit is 35 lakh. So remember, this data have been given in lakh, as you can see. So metropolitan, so loan for housing in metro city have a maximum cap of 35 lakh under PSL, right? So given the high cost of living, this help urban dwellers secure house finance. And now for metropolitan housing cost cap, so this is the cap, not, so 35 lakh is the right. For housing project in metro area, the total cost cap is 45 lakh. It cannot exceed this under PSL, right? So if you are taking maximum 45 lakh loan under PSL, this is the cap they have put you, right? And then other reason housing loan, right? For non-metropolitan area, housing loan are capped at 25 lakh, up to 25 lakh, and maximum it can go, right, is up to 30 lakh, right? So you can see for metropolitan 35, under 35 will be PSL, and maximum up to 45, right? And for other reasons 25 to 30. Then comes metropolitan repair cost. That for metropolitan repairing, if you are doing repairing works, so home loan repair in metro city also qualify for PSL loan with a limit of 10 lakh to help homeowner to maintain their property. And for other reason, home repair loan, it is for 6 lakh under, for non-metro area, the limit for home repair loan is 6 lakh. Then we have something called HFC. What is the meaning of HFC? This is called a house finance company. So housing finance company can avail refinancing loan. They can avail the refinancing loan, right, up to 20 lakh. This 20 lakh is under PSL, under the NHB guideline, to extend affordable credit to home buyer. So I hope this makes sense, right? So what do you think? Is 35 lakh enough for metro housing? Drop your thought in the comment. Now let's see the breakdown of priority sector lending further. Education loan. So friends, up to 20 lakh education loan is under PSL. Remember this limit, 20 lakh, right? And for export credit, what about export credit? So export credit, Indian farmer and MSME are the backbone of our economy. Under PSL, export credit is provided to them. Then if we talk about the social infrastructure, then let's talk about the social infrastructure. So remember the limit. Remember the limit is 5 crore, right? Remember the limit is 5 crore per borrower. For social infrastructure, the limit is 5 crore per borrower. Imagine a world with better school, hospital, sanitation facility. So bank lend up to rupees 5 crore per borrower to fund essential infrastructure. Then we have renewable energy financing. So with the rise of sustainable energy, PSL also support non-conventional energy project like solar, wind, bioenergy, right? So that is the point. So I hope the sectors limit have been clear to you. Now let's switch our focus to some more sector. Like you can see, let me zoom a little bit here, so that you can see large scale loan, right? So as the world shifts towards sustainable energy, financing plays a key role in making green project a reality. So first thing first, as you can see here, large scale loan. What does it mean? See, up to 30 crore. Remember, so up to 30 crore. Up to 30 crore, big project need big investment, right? Whether it is solar farm, wind park, hydro plant, bank offer loan up to 30 crore to support large scale renewable energy initiative. Then we have individual borrower loan. So want to install solar panel on your rooftop or set up a small biogas unit, you can get loan up to rupees 10 lakh for individual project. For a smaller loan, right? For a smaller loan, what happened? So a small group, communities or a startup can borrow up to rupees 1 lakh for renewable energy solution, making clean energy accessible for all. Why is this important? Because green energy means green future. So PSL make renewable energy more affordable. So I hope that makes sense to you, right? Let's look at the next classification, right? So now let's look at some more classification of this PSL. So friends, did you know that even a small loan can make a big difference in people's life, right? Under PSL, bank offer a small loan to help individual and community grow financially. As you can see, the first point is a small loan to individual. That if you need a loan but worried about income limit, so bank provide loan up to rupees 1 lakh, right? For individuals and their self-help group or JLG, joint liability group. Remember it, right? Now eligibility is that household income should be less than or equal to 1 lakh in rural area. Remember, your household income should be less than or equal to 1 lakh, or in non-rural area it should be less than or equal to 1.60 lakh. Then you will receive 1 lakh as a loan, right? So that is the point. And this thing is very important. For SHG and JLG loan, up to 2 lakh can be given. So if it's an individual, then 1 lakh can be given, provided his income should not be greater than 1 lakh and 1.6 lakh in non-rural area. But for SHG and JLG loan, right, a small group working for non-agriculture and non-MSME activity can borrow up to 2 lakh for house repair, for toilet construction or common group activity, right? So that is the point. Now for distressed individual, let's talk about the distressed individual. So for distressed individual struggling with debt from informal lender, bank can help by providing loan up to 1 lakh to repay non-institutional debt, to repay non-institutional lender, right? So because financial access empower rural household, women-led business, and a small community, so paving the way for economic growth and self-reliance. Now let's see the bigger picture here. So friends, in this particular slide, did you know that different banks have a specific lending target under the PSL? So let's get started. So the first category you can see is a domestic commercial bank, excluding RRB and SFC. Total 40% target is there. How much? 40% target. So you can see, using this picture you can easily remember all the data. No need to go through those hectic tables. Now 40% target, this means these banks must allocate 40% of their ANBC, adjusted net bank credit, to priority sector like agriculture, MSME, housing and more. Now let's come to the next part. Foreign bank with 20 plus branches. So their limit is 40%, right? So they follow 40% lending criteria. For foreign bank export credit. So out of this 40%, 32% must go toward export credit. Bank involved in export credit have slightly target at 32%, and remaining 8% should go to other sector. I hope this bifurcation is clear. Out of this entire, suppose this is entire 40%, so it says that 32%. So this portion 32% should go to export credit, and remaining 8% to other sector. Now let's talk about the biggest priority sector contributor. As you can see this diagram, the biggest priority sector contributor is RRB and SFB, regional rural bank and a small finance bank, because they lead the way with a massive 75% target. And especially for this RRB and SFB, medium enterprise contribution should be 15%, right? Each of this sector gets 15%, social infrastructure 15%, right? And renewable energy 15%. So this bifurcation must be clear to you. Now let's switch our focus to our next chart. As you can see, this is micro enterprise. Okay, so this is minimum lending requirement. How much minimum lending is as per the PSL? So friends, ever wondered how bank decide whether to lend their money under the PSL? Well, there are specific target for different category. As you can see, the first term is agriculture lending. So bank must allocate at least 18% of their loan, ANBC, adjusted net bank credit, or COB, whichever is lower, right? They should allocate at least 18% to agriculture. So this ensure that farmer loan to farmer and agribusiness get the necessary financial support to grow, right? So this is about agriculture lending. Now then, after agriculture lending, we have something called SMF. You know what is the meaning of SMF? SMF stands for small and marginal farmer, right? Small and marginal farmer is called SMF. So there is also 10% target for SMF. As you can see, for SMF also 10% target, right? Out of the total agriculture lending, 10% must go through specifically to small and marginal farmer. Remember, out of this total agriculture, total 18%, 10% must go through a small and marginal farmer, right? So that is the point. So then we have micro enterprise. So remember, micro enterprise, the target is 7.5%, right? Except foreign bank with fewer than 20 branches. So this target is not for those foreign bank which have less than 20 branches. For rest everyone, this 7.5% target is there. Then we have weaker section, except RRB. So bank need to allocate 12% of their loan of their ANBC, adjusted net bank credit, to the weaker section. Like I will tell you about weaker section later in this particular chapter. And for RRB, the target is 15% to the weaker sector, right? For regional rural bank, the requirement is slightly higher at 15%, ensuring better financial support for rural development, right? So do you think that PSL target should be increased for any category? So these are the target: agriculture 18%, SMF 10%, micro enterprise 7.5%, weaker section 12%, except RRB, and for RRB it is 15%. Right, now let's look at this for UCB, Urban Cooperative Bank. Let's look at the target. So friends, UCB is called Urban Cooperative Bank, and you can see March 2022, the target was 40%. So UCB were required to allocate 40% of their ANBC to the priority sector. Then 2023 March, 50%. By the next year, the target increased to 50%. Right. So as you can see, by the next year, the target increased to what? 15%, 50%. Right. to support more sector in the need of financial inclusion. Then March 2024, the target increased to 75%. It was a significant jump, right? Then especially out of this, for micro enterprise 7.5%. So separate 7.5% of total lending must go to micro enterprise, and for weaker section as usual 12%, right? So this is for UCB, Urban Cooperative Bank. It increased in the phased manner, as you can see, maximum 75%. Now let's talk about the weaker section component. So I told you about weaker section. So as you can see here, some components of weaker section has been given. So what are the component? First component is a small and marginal farmer. So it may be asked, what is small and marginal farmer? So farmer with a small land holding eligible for loan with credit limit up to 1 lakh. Artisan, they are the part of the weaker section. Then cottage industry worker, government scheme beneficiary, a scheduled caste, scheduled tribe, self-help group, distressed farmer, women beneficiary up to 1 lakh. So these are included in weaker section. Sometimes question is asked that which is not a part of weaker section. So you must know who are the part of weaker section, right? Please go through this particular diagram, this particular table. Everything will be crystal clear. Now let's switch our focus to MSME classification in India. Very, very important. So using this diagram, I will make you clear how MSME are classified in India. So friends, why does it matter? Because MSME are the backbone of our Indian economy, right? So first let's get started with the micro enterprise. So for micro enterprise, investment up to 1 crore and turnover up to 5 crore, right? So this is about investment and this is about the turnover, right? So up to 1 crore investment and multiply by 5. This is 5 crore. This comes under micro. This comes under micro. Okay. What about small enterprise? So investment up to 10 crore and multiply by 5 into 50 crore. And turnover up to 50 crore. So these business are a step ahead, scaling operation, expanding their reach. So that's what small enterprise. And what about medium enterprise? Investment up to 50 crore. Investment up to 50 crore and turnover up to multiply by 5 to 50 crore. Right? Just you can remember it like this. So these are large scale business that significantly contribute to the economy. Right? So this classification is important because they help in getting subsidies, tax benefit, easier loan. That is why this classification is super important. So you must remember this limit. Just remember the top one, and bottom one you can remember by just multiplying by 5. 1, 10, 50 and then 5, 50, 250. These are the limits, right? Investment and turnover. Based on this it has been classified. Now let's switch our focus to the comprehensive credit support review, right? So friends, in this particular slide, are you looking for financial support to grow your business? So India offers multiple credit schemes to help entrepreneur, especially in MSME sector. So the first one you can see is called GCC. What is GCC? GCC means General Credit Card. I told you earlier about this also. So it is a biometric smart card designed for non-farm entrepreneurial activity. Right? Remember the keyword here, non-farm entrepreneurial activity. I hope that makes sense to you. Then we have CLSS. CLSS is Credit Linked Subsidy Scheme. It supports technology upgradation, right, for businesses, and it offers a 15% subsidy up to 15 lakh, right? Up to 50 lakh, 15% subsidy on machinery investment up to 1 crore, right? Remember this CLSS scheme provide you basically technological upgradation scheme it is, and 15% subsidy it provide you, capped at maximum it can go up to 15 lakh for investment up to 1 crore in advanced machinery. So this limit should be clear. Then we have composite loan. So it is a single window loan covering both working capital and term loan. That is why it's called composite loan. Then we have GCC I have already talked about. So it boosts credit for non-farmer entrepreneurial activity. Then we have something called collateral free loan. So loan without collateral for MSE. MSE is micro and small enterprise, right? Remember, medium enterprise is not there, just micro and small enterprise. So loan without collateral for MSE, and it is available for business under PMEGP, Pradhan Mantri Employment Guarantee Program. So why this is important? Because easy financing for a startup and a small business. So you must remember what is CLSS, what are the limits under CLSS, what is GCC, what is composite loan. If you go through book, everything is written line wise. It is very difficult to separate out, to filter out the main content, and that is what I have done in this crash course for you. Right, now let's look at the RBI LEF. LEF is called Large Exposure Framework. This is a super important topic. So what is LEF all about? Let's understand. So friends, that have you ever wondered how bank manage big loan without increasing financial risk? Enter the RBI LEF. So it is a crucial system to safeguard the banking sector. So first thing is, sector concentration. The first thing is sector concentration. You know what it means. Bank lend money to different sector. But what if too much is given to one sector? So higher concentration, you must note it down that if concentration is higher, it means risk is higher. If concentration is higher, risk will be higher, right? So this framework ensures that a balanced lending approach. Then we have second thing, counterparty risk. You know about it. That ever wondered what happened if a big borrower failed to repay? Bank assess the risk of lending to large entity, ensuring that they don't put all their egg in one basket. Then we have something called exposure limit. Yes, very very important. Try to understand. A bank cannot lend too much to a single borrower. So if a bank exposure exceeds 10% of its tier 1 capital, it violates the RBI guidelines. So suppose tier 1 capital is 100 crore. What is the 10%? 10 crore. So bank exposure to a counterparty or connected group equal or exceed 10% of the guy. So that is the point. That is the limits which have been placed. We will discuss the limit in the upcoming slide. And what is tier 1 capital? The core capital that bank must maintain to stay financially strong. The higher the tier 1 capital, the better the bank ability to absorb shock and handle the risk. I think you know about it. Now let's look at the limits for non-NBFC bank, right? For non-NBFC bank, so have you ever thought how much can a bank lend to a single borrower? Well, RBI has a strict exposure limit to prevent financial risk. So first thing, as you can see, for single counterparty, for first point you can say single counterparty, so it is 20%. For non-NBFC, bank can lend up to 20%. It means that bank can lend up to 20% of their tier 1 capital to a single borrower. But wait, there is a flexibility. With board approval, it can be extendable by 5%. Remember, this is for non-NBFC. Non-NBFC means regular bank, right? And for group of connected counterparty, right? When multiple companies or entities are financially linked, they are considered a group of connected counterparty. And for them, the limit is 25%. So of their tier 1 capital. Remember every percentage is of the tier 1 capital. Percentage of tier 1 capital. Remember it. So bank cannot lend more than 25% of their tier 1 capital to such connected group. So it reduces the risk of default affecting the entire banking system. So remember these limits, super important. Now let's look at for exposure limit for NBFC. Till now we were talking about non-NBFC bank. But what about NBFC? Have you ever wondered how much bank can legally lend to NBFC? That is called non-banking financial company. In this case also RBI has set a strict exposure limit. So as you can see, for single NBFC, the exposure limit is how much? 25%. Sorry. So for single NBFC, 20% of the tier 1 capital, and for connected NBFC, group of NBFC, 25% of their tier 1 capital. So it prevents over dependence on NBFC for lending, right? That is the point. And it ensures that bank don't put all their egg in one basket. That is called LAF. Now let's talk about the RBI credit discipline. So friends, when it comes to lending, RBI has set a strict credit discipline to ensure financial stability. But what does it really mean? Let's break it down in the simple term. The first is called loan component. So RBI mandate that at least 60% of the working capital must for large borrower. So when I say large borrower, it means those borrower who have taken working capital of 150 crore and above. That is called large borrower. So RBI says that RBI mandate that at least 60% of the working capital for large borrower must be in the form of loan. So suppose a large borrower there who have taken 200 crore working capital. So at least 60% of that. What is 60% of 200 crore? It is 120 crore. It says that at least 120 crore must be in the form of loan, right? This ensures that borrower don't over rely on short-term borrowing. Borrower don't over rely on short-term borrowing. This is called loan component. Then comes cash credit facility. So bank allow borrowing beyond the loan threshold through cash credit. So this 120 crore, that is at least 60%, minimum 60% should be in the form of loan, and beyond this 120 crore, suppose 80 crore, this can be in the form of cash credit, right? So but wait, there are limit to avoid excessive borrowing. These are the limit to avoid. And you know what are excluded? Export credit and inland sale bill. These are not included in the working capital limit. Remember it. So two things, export credit and inland sales bill are not included in the working capital limit. And there is something called commercial paper investment. If a company raises fund via commercial paper, it counts toward the loan limit. You know, this prevents business from bypassing credit discipline. So why does this matter? Because it prevents over leveraging. It promotes responsible borrowing. It ensures financial system stability. Now, using this diagram, I will break down the MCLR component. So friends, have you ever wondered how bank decide loan interest rate? It all comes down to the marginal cost of lending rate, fund-based lending rate. So the benchmark rate for all the loan. So MCLR has four key components, just like four sections of an umbrella. So the first thing, as you can see, is called marginal cost of fund. What does it mean? See, this is the cost of borrowing for bank. Simple you can say this is the cost of borrowing for the bank. It includes interest paid on deposit and borrowing from RBI or other source. Second is the negative carry on CRR. So bank must maintain a cash reserve ratio with RBI without earning interest. So this increases their overall cost known as negative carry. Then we have operating cost. It covers all kinds of administration cost, operational expense of bank. However, service related costs are excluded, like loan processing fee from MCLR calculation. And tenure premium. A uniform premium is added for long term loan. The higher the loan tenure, the higher the risk. So obviously it's quite clear that if loan tenure increase, risk increase, right? This means premium increase. That is called tenure premium, right? So why is MCLR? This is all about MCLR. Why is MCLR important? Because it determines the loan interest rate. It ensures transparent pricing. The next thing is has the breakdown of MCLR publication requirement. So friends, have you ever noticed that loan interest rate change frequently? That's because bank update their MCLR at different interval. But how often? So MCLR has different tenor and each has its own publication timeline. So the first thing you can see is the overnight tenor. What does it mean? So this is shortest duration of MCLR used for ultra short term loan. Then 1 month tenor. Bank publish this every month. Then we have 3 month tenor. So updated quarterly. Then we have 6 month tenor, right? So it published twice a year. And then finally we have 1 year tenor. So that the most common MCLR benchmark is 1 year tenor for home loan and long term loan updated annually. So you must remember this tenor. Sometimes questions are asked based on this tenor. Now let's switch our focus to the pricing floating rate loan. Very important. Ever wondered how bank decide interest rate on loan that keeps changing? So welcome to the world of floating rate loan. In short, we call FRL. So friends, there is a simple four-step process. Step number 1 is to identify the internal benchmark. So the bank first determine a benchmark rate. Think of it like the base rate from which your loan interest start. Then they add the spread component. So next, bank add a spread over the benchmark. This spread account for profit margin. It account for profit margin, right? And it account for credit risk. Obviously credit risk is there. It account for other cost, and they ensure minimum rate. What it means that to protect the bank financial stability, the loan rate cannot go below the benchmark. This ensures minimum profitability, and then they state benchmark in the contract. So benchmark rate must be clearly mentioned in the loan contract, ensuring transparency, ensuring clarity for the borrower. I hope that makes sense to you. Now let's switch our focus to our next topic, which is none but stressed asset classification for term loan. Very important. So friends, have you ever wondered what happens if a loan repayment is delayed, especially term loan? So bank have a structured way to classify loan based on overdue date. So let's step into the world of stressed asset classification. So there is something called SMA, which is called a special mention account. As you can see, a special mention account. So before a loan becoming a non-performing asset, it goes through different stress level. So these are called SMA. So first of all, SMA 0. SMA 0 means what? That if the loan is overdue from 0 to 30 days, right? This is called SMA 0. It enters SMA 0. Then comes SMA 1. If it is overdue for, especially we are talking about term loan, right? If it is overdue for 31 to 60 days, it becomes SMA 1, right? This is a signal for bank to stay alert. Then we have SMA 2. SMA 2, overdue period is 61 to 90 days. It enters SMA 2. This is the, if dues are not paid, this is the most critical stage. If the dues are not paid, right, for 61 to 90 days, the loan enter SMA 2, a serious warning sign of potential default. And then we have NPA. So sorry, if the loan become unpaid beyond 90 days, it officially become NPA. This means the borrower has defaulted and the bank may start recovering procedure. So why does this matter? So this is all. So let me show you this entire classification in the form pick. Friend, if you think that this video is helpful to you to understand the concept, please hit the like button, because it takes lots of effort to make such kind of slides for you for your better preparation. For the examination time, you just have to go through these important points and you will be able to remember all the fact, and this will specifically help you in your examination, right? So why does this matter? Because it helps bank identify problematic zone early. It gives borrower a chance to regularize payment before defaulting. Then we have something called breakdown of asset classification. Very important, right? So let's talk about it. So friends, every bank hold different type of financial asset, but not all assets are the same. Some generate income while other cause financial stress. So there is something called performing asset. So these are like, healthy asset. These are like the healthy asset for that generate regular income. Then we have NPA, non-performing asset. So when an asset stops generating income, it become NPA. But wait, not all NPA are same. Let's look at the different types of NPA. For term loan, you must remember, for term loan, if the interest or principal remain overdue for more than 90 days, right, the loan turn NPA. For overdraft or cash credit account, right, if the account are deemed out of order, they are called out of order. They are called out of order, right? When they are called out of order, means there is no sufficient balance or transaction, they become NPA, right? Then we have for bills. For bills, when a bill remain unpaid for more than 90 days, it become NPA. For agriculture loan, it is a special case. If a loan is overdue for 2 crop season, it become NPA. So for agriculture loan, it depends on the short term crop or long term crop. For short term crop, it is just one season. For long term crop, it is 2 season. For short term it is 2 season, for long term it is 1 season. What about the derivative transaction? So in this case, if there are unpaid receivable in the financial derivative deal, it become a problem for the bank. So this classification is super important. For every different kind of asset, we have different classification for NPA. Now let's look at the provisioning requirement. So this table I will tell you to remember using a trick, right? So this provisioning requirement is super important. Last year also one question was asked, one case study was asked. So let me give you a trick to remember this provisioning requirement. So you need not remember this table, just remember. So there are two kind of case. One is called normal provisioning, second is called accelerated provisioning. First of all, you must remember the normal provisioning. So what you will do, just write here secured and just write here unsecured. And in this side you write the type of asset you have, right? So a standard asset, I think you know about this standard asset. A standard asset, substandard asset, substandard asset, and inside it D1, D2, D3, right? So these are the different cases. So standard, so let's forget about a standard because standard has very small provisioning. Let's get started with the substandard, right? So suppose substandard asset is there, right? Then we have D1, D2, D3, and finally we have loss, right? D1, D2, D3, and finally we have loss. So loss, loss has to, you have to give 100% provisioning for loss. So let's ignore loss also. Let's talk about D1, D2, D3, and substandard. That's it, right? So how will you remember it? How will you remember it easily? So first thing you do, you write here 100, right? You write here 100. So let me draw the table first. So I hope the table is clear to you. Right, let me use different color plane. So I'm using this color. So 100, 100, 100. What about D1 substandard? You know it. Okay. What about D1 substandard? I think it is also 100. Right. For D1, unsecured portion, secured. For D1 unsecured, yes, it is 100. So these 300 you have to just write as usual. These 300. Now for substandard secure, it is 1525, right? What is it is 1525, right? So you just write here, you just write here 1525, right? You just write here 15, you just write here 25. You add both of them, it will become how much? So you just put this 25 here and you add both of them, it will become 40. So this is how you should remember this table, right? For substandard secured, provisioning is 15%. For substandard unsecured, provisioning is 25%. For D1 secured, provisioning is 25%, right? Again I am repeating it so that it become very clear to you, right? So first of all, you have to draw this table, right? So this is substandard, this is D1, this is D2, this is D3, this is secured, this is unsecured, right? This is secured, this is unsecured, right? So first of all, you write 100, 100, 100, 100. I hope this is clear. 15, 25. Just put 25 here and just add these two. This will give you 40. So this way you can remember the table. No need to remember this particular table. I hope this makes sense to you, right? And for accelerated provisioning only, you need to remember the provisioning value, right? We will do a separate. I will provide you a separate video on how to do the calculation, right? Because every year one case study they are asking based on this. So I will provide you a separate video in our crash course. Today only I will provide you. So that is the point. So that's all for this particular topic. If you cover this much, that is more than enough. for this particular topic. I hope that makes sense to you. And the last slide, you can see these are the maximum extent of guarantee coverage for different category. As you can see, for micro enterprise, where credit facility is up to 50 lakh, 85% guarantee coverage is there, right? When the credit facility from 5 lakh to 50 lakh, 75%. For MSE located in northeast region, it is 80%. For women entrepreneur, 85%. For rest of these, you can see 85%, right? STSC, JDD, right? And other category of borrower, it is 75%. So these are the extent of guarantee cover, right? So this chart is also very important. Sometimes questions are asked based on it. So you must know this chart. You must remember this chart, by heart this chart. So friends, now what you have to do, this is all about the video portion. Similarly, I will provide you a video of the rest topic, right? So today what you have to do, you just go to the folder, you just now solve MCQs, you just solve now quizzes based on it, and see whether you are able to obtain 60% marks or not. You should be, because I have clarified every aspect. You must go through this video once more to make your conceptual clarity. So if you want to join our crash course, you can WhatsApp me on this particular number. Thank you.